All right, welcome out traders to this week's market bias update report for Sunday, February 18th. Diving right in. Starting off on the S&P, we're looking at the S&P futures chart here, but we could just as easily go to SPY, which is the ETF that tracks it. We are continuing the bullish uptrend, just grinding on top of the 9 EMA, our 9-period exponential moving average shown in green here. Broke the 20 briefly a few weeks back and regained it with bullish momentum. And right now, I've got to say this is neutrality. I honestly am still in the camp that I would love a pullback at least down into the lower end of this neutral range that we've been in for the last week or so. If not breaking that and coming even further back down to meet our 50-period moving average here in red. The reason I say that is we have gone up from the previous low a few months back. Here to over the last 100 days, we are up 23%. Now, on average per year, the S&P usually moves 10 to 12% in a year. So we are up double that in the last just few months. That is not sustainable on the long term. And for longer term entries, we need to have some pullback here, give us time to reset this, and then look for the next bullish trend. So I'm not going to be surprised if we hold this 503 and 50-cent level this coming week and just kind of chop around in between that and the lower end of the range around 490, somewhere right in there. So short term, I am neutral, still hoping for actually a short-term bearish move to come in back down to that rising 50. We have continued to be overextended on our RSI, which is an indicator that shows overbought or oversold conditions. So it is still showing that we are overbought in this and need some reprieve. And the MACD is also starting to trail down a little bit here. And if we look at it from a slightly longer time frame, we can actually see a slight slope down. And on the RSI, we can also see a little bit more exaggerated of a slope down. So this is what is called divergence. When you have divergence in indicators versus price action, it means the indicator is showing one thing and the price is doing something different. So in this case, all the way back here, we had our peak in RSI, and our RSI has been going down ever since then, but the price has gone up. That is diverging behavior, right? So this is a precursor to say, hey, we might be overbought. We might be needing to reset the chart. And because of this divergence in both the MACD and the RSI, that is why I am calling for a larger pullback instead of just neutral and then off to the races again. Now, this is impacted heavily by economic news, obviously, and a lot of other things, especially inflation and the Federal Reserve. Anything that the Federal Reserve announces or does, and we do have the Federal Reserve meeting minutes coming out this Thursday, so know that that is coming down the pike this week and might impact the market. But this is divergence, and I am no longer interested in playing this trend to the upside until we get either prolonged consolidation here or a pullback. I am more interested looking at charts that are on the bottom end of the chart and working their way off lows instead of buying up at the upper end here. Okay, so now if we go out to the QQQ, this is going to be very, very similar. Obviously, very similar move higher, kind of in the same consolidation zone, but below 439 and above 425. So somewhere in that range there. Slight difference here is we did actually close below the 9, this green line here, on Friday, and I actually have a proprietary indicator that I've coded that is giving me a red arrow here you'll see at the top end that is telling me, look out, this might be a time for a pullback to occur. We also have very similar slope and divergence in both the RSI and the MACD from the last few months, and we had heavy selling on the volume on Friday. So again, top of the chart problems here. I am looking for charts coming off the lows, not particularly interested in chasing the high prices right now. Now let's go out to IWM, the Russell 2000 ETF. And you can see here that we've had this kind of vicious pullback a few weeks back and then have just slowly been holding and gaining ground again. We kind of had this little double top come in around 205. And I would love to see this go neutral just under 205 for the first part of the week and then give us a breakout. And if we toss this one in particular out to a longer time frame chart, you can see that we do have movement to the upside here. And that looks really good to me for a long-term entry, looking to eventually play back up to 230 and 244 for the all-time high. But as a long-term perspective, I love the Russell 2000 a lot more than I do the other two charts, the S&P and the NASDAQ, that we previously looked at that are pushing all-time highs already. Now, if we go out, let's look at crude light. Crude light is an interesting spot right now, and I really like this chart. The 9 EMA here you can see had been going down steadily, gave us a little double bottom here around 74 and change, and is now curled higher. Our 20 period moving average is starting to bottom out and curl a little bit. I would love to see a couple more days of just consolidation in this range for that to curl and start to turn higher. But if we go down back to the daily chart, you can see they have already curved. They've crossed back. So the shorter term exponential moving average is higher than the longer term 20 period simple moving average, which is a bullish crossover. And that happened actually right here on February 7th. And now we are just looking to try to break out of this pivot high at 79.29. So if we have a close above 79.29, to me, that is off to the races and officially the start of a new bullish run in oil. If this chart confirms on the futures, charts like ExxonMobil or Valero or Chevron will all start to look really good. Chevron here has a breakout in its own right and a good run back up to diagonal resistance around maybe 161, 162, somewhere right in there. So anyways, these charts in the energy sector are going to start looking really good if crude light does break out of this range. So keep an eye on that area of the market. If we go out to gold real quick, nothing really to see here. We are just kind of in a choppy mess on gold. We have started to form kind of a consolidation anywhere between 2000 and the upper end here around 2100. We are bouncing off the lows of that, so this could potentially be interesting to some traders. It is not to me until we get back above this red line, the 50 period moving average, which is coming in at 2042, let's call it. So back above that, I wouldn't be surprised to see us come back up and test the upper range around 2100. But until then, I'm not super interested in this chart. Let's go out to our metals. Let's go out to palladium next. Slowing of momentum here. We had a big sell-off. Second sell-off wasn't nearly as severe. We are reclaiming some of the moving averages. If we get back above the previous pivot high here of 1000 on the nose, I might be interested in playing that to the upside, looking for a pocket fill between these moving averages, between the 50 period moving average and the 200 that's up at 1180. But we need a little bit more time consolidating down here. I would love for this entire week to just stay down here below this 50 period moving average. Let it continue to creep down a tiny bit and come down to that 1000 level. Right now, we're about 10 points away. And give us a really good break of that whole number 1000 with the 50 period moving average coinciding with that. That might be a really good short-term trading opportunity. So keep an eye on palladium. And then looking out to platinum, very similar pattern, but you'll see the one difference is there isn't a big gap between the 50 and 200. So even if we do break out here above the previous candle high, we don't have much room to run until we get into some pretty significant potential resistance. So I'm not super interested in platinum at this time. And then finally, for the metals of what we're going to cover this week, looking at silver. Silver is actually quite interesting to me, more so than gold. And silver has the potential to run a little bit harder than gold does usually when it does break out. But I like this kind of double bottom test around $22. I love the resistance of the 200 period moving average in this gray line here that is in the same zone as these pivot highs. A break above 2365, let's call it, would be a signal for the upside. So silver might be in the cards for trading this week. Going out real quick, let's check our market internals. The AR high-low indicator here just basically takes all the stocks in the last month that have been making new all-time highs, subtracts out all the ones in the last month that have been making new all-time lows. And I say all-time relative to that 1 month time frame, just to specify. And then plots the number, giving the difference between those. And so anything that is above 50 is typically bullish. Anything below -50 is bearish, and we are still firmly in the bullish camp here. So even though the S&P and NASDAQ are at the top ends of their chart and need to pull back and reset that chart, we are still overall in a bullish uptrend. And until that changes and we get a series of lower pivot highs and lower pivot lows, we have to remain bullish on the overall market. Finally, let's duck out and check out Bitcoin really quick. So Bitcoin, this chart doesn't show the full story. Thursday, we had a little inverted hammer candle signaling maybe the top end of a range had been reached for a little bit and the slowing of momentum. Friday, we just had another candle. We did close bullish on that one, but basically within the same range of the previous candle. And today, we just have a little doji sitting there doing absolutely nothing. So the real story of this chart, we actually have to go out and look at TradingView. And the reason for that is this is the futures chart that does not give us data for Saturday or the first half of the trading day on Sunday because the futures market is not open during that time. It just opened back up about an hour ago at 3 p.m. Pacific Standard Time. So if we want to see what has happened really over the weekend, we need to drop out to TradingView or another online platform that tracks Bitcoin specifically against the US dollar so that we can see what happened. And on this, you'll see Thursday's candle, the doji, Friday, doji. Saturday, we did test down briefly, set a wick low down there around 50,647, and then popped back up, and we are still just in this range. I am fully anticipating this range to resolve to the upside. We may get another day or so of it just trading within this range. I don't expect that we are going to break the rising 9-period moving average here in pink. I expect that to hold and to eventually break out of this 53,000 level, heading for 56 up to maybe 57,500. That is kind of my next target range. And the reason that I'm not expecting this consolidation to turn into a larger pullback is basically there is just a huge bullish theme going on Bitcoin right now. I just posted a video explaining in detail that bullish theme, so I'm not going to go into it on this video. If you are interested, go to the YouTube channel and check that out, Escape Velocity Trading on YouTube. But the short version is after the spot ETF, demand has just been absolutely insane, and there are a number of very specific reasons for that. And because of that, I don't see any selling pressure lasting more than a day or two. I think any selling pressure in dip in price is going to be a back the truck up and buy moment. And specifically think that because if we drop this out to a weekly chart, you can see the last time we went parabolic, how big these weekly candles are, the range of those candles, and how far overextended from the moving averages we can really get before we need a pullback to reset the risk to reward perspective. So here, the top of this candle all the way up to 58,000, and the moving average was down at 39,000. So almost a $30,000 difference there. Here, we are getting a little overextended from the 9-period moving average, but we are not nearly as extended, and we have just eclipsed above the previous pivots here. which were our previous resistance zone. There really isn't any resistance on the weekly chart until we get up into that 58 to 60 range. I'm being conservative with 57,500 being my target. But for more analysis on Bitcoin, go out to that video that I just posted on the YouTube channel. Finally, let's just take a real quick look at the heat map. This is the 1 week performance for the trading week last week. And obviously, the big tech industry, communications, technology, Amazon for internet retail, that was where the selling was happening in the market last week. The rest of the market actually held up pretty good. And that is great to see because these big companies make up so much of the triple Q and of the S&P 500 that we need them to reset themselves a little bit before this next leg higher in the market. If they don't reset themselves, they're going to be too overextended and they're not going to be able to carry the market forward. So what we really need to see is them take some time off and the rest of the market pick up the slack and help hold the current level. We're not going to probably break out on the rest of the market moving higher unless we have participation from these big dogs, but they can hold the line so that the next starting point for the next bullish cycle is at the current level instead of a significant pullback. So it's really going to depend on if the lower echelon of the market holds its ground or not. And right now, at least last week, it definitely was. We'll see if that continues this week. Finally, to end on here, let's go out to Forex Factory. This is looking at the economic data that is coming out this week. As I said, we have FOMC meeting minutes. And actually, I correct myself. I said it was on Thursday. It is actually on Wednesday, the 21st. And then Thursday, the rest of the important data for the week comes out. Unemployment claims, manufacturing PMI, and services PMI data. Those will all be important. So keep an eye on that for Wednesday and Thursday, but the rest of the week, we don't really have anything of importance. So it is a very light week in terms of economic data, and that helps lend itself to it being more of a technical show looking at the charts, which is what we like because there aren't these known events that might bring in extra volatility into the market. Anyways, I hope that helps, guys. As always, let me know if you have any questions. Hit me up in the comments. I'm here to help, and I will catch you next time.